Hello, and welcome to our latest Money Show Money Masters podcast segment. I'm Mike Larson, editor-in-chief at MoneyShow, and today I'm speaking with Jon and Pete Najarian, co-founders of Market Rebellion. How you doing, guys?
Doing great.
Yep, feeling good, Mike. Thanks for having us on.
Excellent. Glad you guys could join. You've been involved in the trading and market education business for a long time, and I'm sure most of our viewers and listeners are familiar with most of that background. I wonder if we could start out talking a little bit about what it is you do with Market Rebellion and what your firm offers.
We, like you say, unfortunately, I have a combination of no hair and a lot of gray hair. And the reason is I've been doing this for 41 years, Mike. Pete's significantly younger, but I've been doing this since 1981. So this will be my 42nd year in about a week. And I love doing this. I mean, Pete and I we had to train a lot of traders on the floor because it's not like you come out of college and you're ready for floor trading. So you had to teach them about risk management. You had to teach them about time decay and basically how to trade. It turns out that translates rather well to individual investors that want to trade options and want to control their risk and do so with an exchange listed product like options. So knock on wood, Pete and I have built up several businesses, sold a couple of them, sold one to Citadel, the big hedge fund, sold another one to Goldman Sachs, sold a third one to E-Trade. And a lot of that wasn't just brokerages and traders. A lot of it was education. And knock on wood, we're still doing all of that.
We really enjoy what we do. I have not been quite as long as Jon in the business, but not too far behind him either. I joined in late 1992 on the trading floors and then migrated off. And then we went on the path that Jon already defined. But it's a lot of fun because one of the things with Market Rebellion is, we're able to get out there and let people know exactly, how do we do what we do? We try to educate them on the options. It can be very confusing. And so we try to make it as easy as we can. And I think by doing so, people get a little bit more comfort with what it is that we do, the leverage that brings, and just another way to attack the markets. And it's, we all know these markets can be crazy. They can be volatile. We can tell you one thing. The volume in the options world where that's where we feed has absolutely exploded to the point where in the last few years, it just has gone at an astronomical level to the upside. I think so far this year, 2023, we're averaging about 44 million contracts per day. When I got into the business, I think that number was closer to 1 million. So, you look at some of these numbers, it's just absolutely extraordinary. And now 35 million contracts in a day feels very slow. We're yawning and all that type of thing. But it is different, and we love what we do, and we just want other people to have the opportunity at least to see what it is that we do and hopefully get educated to do it.
Let's talk a little bit about that. I mean, one of your guys' bread and butter tactic, it's monitoring unusual options activity and telling people what kind of you can sort of garner from that. So why don't you talk a little bit about what you're looking for, what kind of signals you're looking for and how people can use that in their own trading?
Sure. Well, I'll say that unusual activity is probably 85 or 90% of what I do and what Pete does probably, Mike. The reason is that somebody is telling you by buying a bunch of calls or a bunch of puts that they're either really bullish calls or really bearish puts. And you might say, well, number one, how do you know they bought them? Well, because we have computers that are in the data centers of the exchanges that basically let us know in that split second, did it trade on the offer or did it trade on the bid? If somebody sells an option, Mike, that's all they can make. And some people, that's what they do. They just sell puts when they think the market's going up, and they sell calls when they think the market's going down. Strategy works, but as you might imagine, occasionally they get burned, and you can only make what you collect in premium for selling the option. On the other hand, you buy a 50-cent option or even a $1 option, you could see that option go to $2, $5, $10 if the direction that you picked is the correct one. So you're defining your risk when you enter, and you're getting a leveraged return. So to Pete's point, when there's 44 million contracts trading a day, it's really hard for anybody, even for my eyes, to see it. So we don't, but the computers do. And then, Mike, we just ride that wave like a surfer.
Got it.
Yep. It can be complicated at times, but not every single trade is attractive to us either. I mean, that's something we go through. And an average day, I would tell you that on a standard average day, probably 25 or 30 or more will hit that we consider to be unusual. How many will we react to? It could be as few as 2 or 3, or sometimes even none. But the reality is, at least it gives us a choice. It gives us direction to look, and we can follow some of the themes that we are seeing played out, whether that's sectoral themes or whatever it might be. It could be in just about anything. It could be just in the the Bitcoin world and that type of thing. So it's something that at least points us in a direction. It gives us a way to kind of investigate into something else that maybe we wouldn't have had we not had the unusual options.
Yeah, I was looking at some of the stuff you guys published recently or talked about. I mean, it was everything from uranium to shoe companies to, this, that, and the other. So I know it can kind of come from any part of the market.
Yeah, and it truly does. And like Pete said, though, Mike, when you're seeing Riot blockchain or Mara, which is Marathon, or, MicroStrategy, those are 3 stocks that are all 3 in the Bitcoin or the digital asset space. So when Bitcoin's active, those are going to be active, whether it's up or down. If you see all 3 of them moving at the same time, somebody big out there is accumulating a bullish or bearish position. And the same thing's true of energy, same thing's true of chip stocks or tech, all of that. When you see multiple companies in the same sector hitting, that's a real tip-off.
Now, you talked about the explosion in options volume, just options trading activity in general. I mean, so I have to ask about the whole zero DTE thing. I mean, everybody talks about this. What are your thoughts on that? Good, healthy, concerning, passing fad? Where do you come down on the whole thing?
I think soon everything will be zero DTE. By that, of course, Mike means, folks, 0 days till expiration. Mm-hmm. So in other words, when I started in the business in 81, every option that was listed with a 3-month out option expiration. Then it went to monthly expirations, probably more towards the late 80s, where we had monthly expirations. Then we went to weekly expirations. And now things like the VIX and the S&P have daily expirations. I think people really like refining or defining their risk down to that time frame, especially if they're day trading, because then it's not really a time decay game, even though a lot of people do lose because they don't understand time decay, but it becomes more of a straight directional or a binary bet. I'm bullish or I'm bearish, and I'm going to be right or wrong today. I'm not going to have to wait 2 weeks to lose my money. I'm going to know right away. And of course, the converse of that is I'm not going to have to wait 2 weeks to make my money.
Right. Yeah, I think time is always something that everybody's going to have their own opinion on that, quite honestly. Yep. They want the time. Maybe they want to go 3 months out. I can tell you this, though, since the pandemic specifically, we've definitely seen just broad-based, they have come for far shorter timeframes, and that's an absolute. I mean, we're looking primarily, we call leaps something that goes out to next January or even the following January or further out than that even. But, it's funny now a leap is something that's a month out. That seems like an eternity. So that's kind of the direction the markets have brought us. We just kind of flow with it. And, we don't pretend to think that every trade that we see or we dissect is going to work. We know they're not all going to work. We don't know always what is the rationale behind the decisions that were made. But I think this at least gives us an opportunity to focus on a specific stock. Maybe it's a specific sector, whatever it might be. But at least it pulls us in somewhere to look, and we can take our shots and try to figure it out from there. But the daily options are that's pretty addictive, man. That's and that is the direction it feels like we're going.
Yeah, it's funny. Just like you said, that the term long term can mean, I guess, it's in the eye of the beholder there. What's long term these days?
Yep. Very true.
Let's shift a little bit from tactics and talk about this market environment. I mean, where do you see things? How would you characterize this environment, especially after we've had this kind of multi-week pullback in August and September?
I think the markets are really having an internal fight about, okay, who's going to be right? We just put on $1 trillion in debt in just 3 months because we had just extended the debt ceiling, and now we just hit it again, and we had to extend it. So there's the conservative folks, and that doesn't mean politically conservative, but it means, people that understand finance and that you can't just borrow an unlimited amount of money without depreciating your asset, without depreciating the dollar, without making the dollar worth less. Again, like Buffett said, not worthless, but worth less. And I think that's a fight because right now we've got the Fed moving rates up. That's tough for people that are borrowers, and the U.S. government's the largest borrower in the world. So I think it's a fight between, okay, when we finally peak on rates and start coming down, people want to be in the market because, rates are coming down. And I get that, but we don't know when the peak is. And I don't know how much longer the Fed is going to have to stay at it. But based on the PCE, producer price, or the CPI, for the consumer side measure, I think both of those are things that we're going to have to keep an eye on if they're hot.
Yeah. And I think the one last thing I'd add to that whole thing is, it's funny how the options world can kind of give you a little bit of a gleam of an eye to be able to see something that might still be out there. I can honestly tell you, we've seen a lot of the option paper that suddenly got back into energy, and they started doing that basically in June, for sure in July. We know what happened with OPEC and some of the cutbacks and all the rest of it. And we've seen a pretty significant run, obviously, in energy. So when you're seeing that and what Jon was just talking about with these yields that we're seeing in the 2s and the 10s and all the rest of it, it gives people a reason to say, you know what, maybe I'll just bank a little something here, and I'm going to take off a little bit of the exposure that I've got on the NASDAQ, or maybe it's the Dow, maybe it's the S&P, whatever it is, but the stock market, and take that back. Well, you had that huge run, obviously, the first 6 months of the year for the NASDAQ. So a lot of people, they're not selling the whole position, but I think a lot of people are saying, well, it's a heck of a run. Maybe it's a good time to maybe take a little bit of that off, and I'll designate it to go over here. And I think that's kind of what we're seeing playing out right now. And it's not just energy, it's materials. There are other parts of the market that I think are starting to see a little bit of a lift. And that just kind of comes with everything that we talk about as far as, whether it's volatility or whether it has more to do with what's going on with the Fed. There's a lot of different things that I think are pulling these markets, in different directions. But certainly we're seeing that with energy, and we've seen it with crude as it's gone from 68 to 93.
Yeah, I mean, that's been a heck of a run. I was going to ask about it. We're back to talking about $100 oil and $4 gas, national average. Obviously, it's already up there in some parts of the country. What do you see happening over the rest of this year? I mean, is that a sector? Obviously, it did great last year and was kind of lagging for a while, but certainly playing catch up now.
Yeah, and that's all since June, what Pete just talked about. $68, $67 was June 28th. That was the low in June. Now, as we get into later September, we're pushing up there, and we've been over $93 per barrel. Russia's cut back on production. The president has cut back on leases, oil leases up in Alaska, and made it more and more difficult for people to produce here domestically. So I don't know, unless we see a drastic cutback in demand, which I don't see. You know how it works, Mike, supply and demand. If we've got more demand than we have supply, prices are going up. Does it go straight up? No. We're backing and filling right now. Almost every day I see us go 89 and then back down to 87.5, 90 and then back down to 88 and so forth. It's backing and filling. And that's something that people are going to have to worry about, and something that the party in charge right now, Democrats, are going to really have to worry about, that because prices are so much higher, and crude oil affects almost everything from transport to plastics to what you put in your vehicle to get from point A to point B, to flying and traveling for boats, ships, all of that. It all runs on petroleum. We want it to run on electricity, but it can't, not for decades and decades.
I guess, the time that we have left, we're about 6 weeks out from the Orlando Money Show. We're glad you guys are going to be joining us there. And I think the audience is going to really want to hear what you guys have to say. Your placeholder title was, will the Fed drive us into a recession? So I'm just kind of curious, when you look at the Fed, where we're at with the interest rate environment now, I mean, just a sneak peek. I don't want to give away the story here, but what are you seeing when it comes to policy and the economy here?
I think Jay Powell is a very smart guy, but unfortunately, he's like the Grinch. Who might have also been a smart guy. I don't know. But he's the guy. Everybody else got to, Mike, ride forever on low interest rates. Bernanke got to. Yellen got to. They didn't have to jack up rates. This guy has had to jack up rates. And a lot of it due to the just massive spending programs that have gone through government, that have given money to people that didn't earn it necessarily. But the government just threw trillions of dollars at consumers, and the consumers spent it. So prices went up across the board. I think now he's got to be the bad guy for a while. He can't be the nice guy. Everybody wants to be the parent that all the kids love. But the parent that gives the discipline is the one that nobody really loves, and instead they fear. And I think that's what Pete and I will be talking about in Orlando.
Yeah. And the last thing I'd just add to that is the one biggest concern probably for me, Mike, of all the things that I see out there is debt. And I'm not just talking about governmental debt, which is awful, but I'm talking about the personal debt with the houses and credit cards and everything else. I mean, it's something I've been watching for a long time. I brought it up a lot, but it seems like people just don't listen. But it's 13 trillion, then it's 15 trillion, it's 16 trillion. I mean, these are huge numbers. And I think this debt issue is going to be something that sooner or later has to be addressed. I don't know when we will. We're still riding on it, but that's something that I think is definitely concerning to me.
Well, listen, guys, that's about all the time we have today. I did want to say thank you so much for joining me here today. Thank you all for watching. If you want to hear more from Jon and Pete, again, they're going to be speaking with dozens of other market experts at the Money Show Traders Expo in Orlando. We're running from October 29th to 31st at the Omni Orlando Resort at Champions Gate. So you can click the link below, read some more about the event, and go ahead and register to join us. And if you did like this video or the other ones we've had, don't forget to hit subscribe and like. And that way you'll get updated when we have a new one. So again, Jon, Pete, thank you so much, guys.
Thanks, Mike.
Thank you, Mike.
Appreciate it.